Well, welcome into the Money Wisdom Podcast, powered by Johnson Bernetti. My name is Jake Dozer. I'm a certified financial planner and advisor here on the team here in Connecticut. And of course, Nick Colantuono, as always, is joining us. Nick is a certified financial planner and advisor in our Boston area, Massachusetts offices. You know, we have a question in front of us that is a question we hear a lot. And sometimes folks thinks it's answered differently based on the state you live on, and that's not entirely true. The question is my Social Security benefit taxable? And we can give you a short answer, but of course, in all these scenarios, it depends. It really does. But in short, the answer is going to be in almost all cases, yes. So, Nick, you know, Social Security taxation is different federally and state, but just kind of sticking in the federal side for now, tell us, you know, how does Social Security calculated as tax? What does it depend on? What are the factors? What do we need to be thinking about?
Well, so the way that they calculate how much of someone's Social Security is subject to tax is based on that person's modified adjusted gross income. And this is where we kind of get into the whole lingo thing. But the easiest way to think about it is you basically take all your sources of earned income, you take half of your Social Security, and if that number is above a certain dollar amount, well, that determines how much of your Social Security is going to be subject to your federal and state taxes. Now, of course, if you live in a state that does not have state income tax or a state that does not tax you on your Social Security, well, then you don't have to worry about that. But, you know, the federal number is really the one that kind of universally hits everyone. So the number that most people need to be aware of is right around $25,000. So this is whether you're a single tax filer or whether you're married filing joint taxes. If that modified adjusted gross income figure is over, well, let's say it's under $25,000. Well, then your Social Security benefit is likely going to be tax-free on both a state and federal level to you. Now, if it's over $25,000, yet under the next threshold, which is right around $35,000, maybe $45,000 if you're married, well, then you're only going to pay taxes on 50% of your Social Security benefit. And a lot of people say, oh, you know, 50% tax on my Social Security. No. Only 50% of your Social Security is going to be subject to federal and state taxes.
Right.
And then, as I mentioned, that third threshold is right around, you know, $35,000 if you're a single tax filer, about $10,000 on top of that, $45,000 if you're married filing joint taxes, where now up to 85% of your Social Security benefit is going to be taxable. And of course, the amount of tax you pay on it is based on your federal and state brackets.
Yeah, I mean, that's you hit the nail on the head. That's great. I mean, so in effect, the takeaway, listener, is either it's going to be not taxable at 50%, or taxable at 85%. And as Nick pointed out so eloquently, it's not a tax rate of 0, 50%, or 85%. It's taxes on the benefit. So if your check is $2,000 a month, obviously, if you're not paying income tax on it, your tax rate's 0. If your check is $2,000 a month and it's subject to 50% tax, then you're getting income tax on 50% of $2,000 a month, or $1,000. Or finally, if you're subject to the 85% tax, that's 85% of $2,000, which is $1,700 a month, is subject to income tax. What rate will it be taxed at? What rate will that 0, $1,000, or $1,700 a month be taxed at? That's subject to the other income tax. What is your total amount of income? Plug that into the tax brackets. That's where you're paying. So, you know, that's complicated. There's a lot of moving pieces with this, and we'll break this down more. But if this decision of how much of my Social Security is taxed and when should I take Social Security and how do I combine it with my other income sources, if that's baffling to you, which it is for most, and you want some help on it, we'd be happy to help you. We've got a resource actually that we'll send out to you complimentary if you reach out to us. That'll get the ball rolling with this conversation. If you simply text the word social, SOCIAL, to 800-757-0436, we will send you a Social Security decisions booklet your way to give you the framework of how do I make the decision with the timing and understand it, etc. Again, text the word social to 800-757-0436, and we will send you a Social Security decisions booklet your way. So we talked about how technically is Social Security calculated on is it taxable or is it not. We talked about how to interpret that data. Let's talk quickly about the state taxes. Connecticut and Massachusetts and every other state of the union are going to be a little bit different. In Connecticut, for instance, as of 2022, when the governor passed this bill, if your married filing jointly income is below $100,000 of adjusted gross income tax, you will not pay income tax on your Social Security check. So if your total income is $100,000 or less and you're married filing jointly, you're not going to pay state income tax on your Social Security check. Technically, that's phasing in. So starting in 2026, that will be fully true. Right now, it's 75% true. And then that's also true, by the way, on pension income. It's true on IRA withdrawals and annuity withdrawals or income. If you're single, that threshold is $75,000. Nick, in Massachusetts, is there anything like that, or are there any rules where it's not taxable at the state level?
Yeah, Jake, ironically enough, for a state that has worked very hard to earn the name Taxachusetts, Massachusetts tax filers pay zero state income tax on their Social Security benefits. So for all of you Massachusetts residents out there, not to worry. Social Security is not taxable at the state level here in Massachusetts.
Well, there you go. That's fantastic. I guess all of our Connecticut residents just to move up there. And man, they're all of a sudden saving on the state income tax. But in all seriousness, that is a good transition into the rest of the conversation, which is, okay, if now I know how Social Security is calculated, if I kind of understand what that means to me, if I understand what it means at the state level, at least for the listeners that we primarily serve, the other things you need to be thinking about is when to take Social Security. And that's a whole nother ball of wax, and it really is, again, not only is taxes on Social Security contingent upon the other sources of income that you have, but also when you should take Social Security is contingent upon the other sources of income that you have. So for instance, perhaps you're someone who's done a really, really, really good job saving. And you're in a situation where you can not necessarily need your Social Security check to be huge in order to not run out of money. You might be someone who would be served well by taking Social Security early, knowing that, yeah, it's a little bit less, but now I'm no longer risking not living long enough to delay and get a bigger check, right? Because if you're taking Social Security early, you're getting a smaller check, but for a longer period of time. Versus taking it later in life, 67 or later, you're getting a larger check because it grows every year you delay it, but you're getting it for a shorter period of time. So if you're taking it between 62 and 65, if you take it at 65, that's 3 years you didn't get it in the first place. So yeah, it's bigger, but when do those numbers break even? A lot of times those break even numbers are in our late 70s and early 80s. And what that translates to, if you don't live past that age in the first place, you don't win. Delaying was irrelevant. And so, Nick, what other things do we need to be thinking about other than the break-even ideas? What other things do we need to be thinking about as far as the timing of Social Security?
Time value of money. And the idea there being, when will you need your most significant income in retirement? And I would argue it's in those early years. So my philosophy has always been the go-go years. Exactly, Jake. So again, my philosophy, and I feel this is probably maybe somewhat universal across the firm, but you take Social Security as early as you need it if it doesn't result in being penalized for doing it. And when I say need it, well, sure, if you have saved other money, you don't, quote, need the Social Security, but you need money from somewhere. And I would always advocate taking money from the government or taking money from Social Security while allowing the money that can be maybe working a little harder for you or can be left behind, God forbid, if you're no longer here, almost letting that continue to ride. So again, I get it. The longer you wait for Social Security, the higher your benefit's going to be. But what if you plan to do more things in those early years between, retiring at 65 and maybe, kind of slowing down at 75 versus just waiting as long as possible to take Social Security? So again, the time value of money is key when coming up with a plan. It's not just looking solely at Social Security and say, if I wait as long as possible, I get more money out of it per month, because there's a lot of other factors that go into that. And it's often, when do you need the money? and what options do you have when it comes to where you're going to get that money from? And oftentimes, Social Security is just the lowest hanging fruit, where, again, the other money that our clients have saved can be in a place where it provides them more flexibility. It can work a lot harder for them. It can maximize legacy. God forbid if anything happens to them and they're no longer here. So again, as you're aware, there's a lot that needs to be thought about when even just making a decision as targeted as Social Security.
And so in short, folks, know how your Social Security is taxed, know when to take Social Security, and know that a general rule of thumb isn't the right one for you. Making a decision that is predicated upon your larger retirement plan is where you need to start. Hopefully today's content has been helpful. Hopefully this has started a discussion that you can now double check against the decisions you've already made, or is something that's going to lead you into this next stage with a lot more confidence and certainty. If this video has been helpful, give this video a like, subscribe to this channel, whether it be on your podcast medium or it be on YouTube, to make sure that you hear the next conversation as we further discuss these ideas. And make sure to tune in next time to the Money Wisdom Podcast powered by Johnson Brunetti. We'll see you then.
Johnson Brunetti is a marketing name for the businesses of JB Capital and JN Financial. Investment advisory services offered through JB Capital LLC. Insurance products offered through JN Financial LLC.